Good afternoon, everyone. How are you doing today? My name is Steve, head of wealth management and Web3 business for Futu and the moomoo. So wealth management and Web3, two very exciting words. So today I'm gonna wear my Web3 hat to moderate this panel discussion. I know it's been a long, but I believe rewarding day for all of us here at MooFest 2025. I'm surprised to see actually there are still so many people in the room. Not so sure if you guys actually are looking for the big final lucky draw or because you guys actually are interested in this topic. But as the last final discussion, so I wish we could make you a little bit luckier by giving you something invaluable to take away from this discussion. So we're gonna closing today with the big one, the convergence of traditional finance and digital assets. It's a topic that's not only timely, but transformative. This space is evolving very, very quickly with the shifting regulations, maturing infrastructure, and rising institutional interest, creating opportunity we could not even imagine just a few years back. So here in Asia, we are seeing the convergence play out in real time, especially Singapore, right at the center. So we have the very right mix, the forward-thinking regulator, a strong investor appetite, and also a rising institutional interest, building new digital frameworks on top of existing foundation. So we are already seeing this shift reflected in investor behavior too. According to moomoo Singapore 2025 Retail Investor Sentiment Survey, conducted with nearly 1,500 local investors. Nearly 40% of moomoo users in the survey say that they hold crypto in their portfolios. That's well above the world average and points to growing comfort with digital assets as a legitimate part of the portfolio, especially among higher risk investors, nearly 30% of whom plan to increase their exposure in the second half of this year. Okay, to make sense of it, I'm very proudly joined by four incredible thought leaders who are shaping this space from very different but deeply complementary perspectives. So Brandon, the CEO and co-founder of Treehouse, a global DeFi startup building risk and data infrastructure for institutional DeFi. Brandon brings the vantage point of a builder who is solving real-world problems at the edge of innovation. Louis Liu, CEO of FormalPay, a licensed payment institution that's helping institutions bridge fiat and crypto through payment, treasury solutions, and the CBDC pilots. So he offers a clear view into the regulated utility of blockchain in Asia. Mina King, the executive director at the CME Group, home to the world's most trusted regulated crypto derivatives. She's here to share what institutional adoption will look like and how regulated markets are evolving to meet demand. Lastly, Jason French, head of a client at a Signum Bank, one of the world's first fully regulated digital asset banks, with the experience spanning both Asia and Europe. Jason brings a unique dual lanes view into tokenization, custody, and next generation banking. So I'm thrilled to be monitoring this panel. With further ado, let's get started. The first segment, we're gonna talk about stablecoin, right? I think this passing of stablecoin legislation marks a very significant turning point. So my first question will go to Louis. So in your view, how does this shape the dynamics between Web3 native players and the traditional financial institutions?
Sure. First of all, thanks, Steve, for the introduction, and thanks, moomoo, for inviting me and FOMO coming to this grand event today and have this chance to share how FOMO, our views on the digital asset and now the stable coins. FOMO, we are a Singapore payment company. We provide the payment solution to over 10,000 of merchants day to day to help them on the digital payment. Every business needs to collect money. So in the past, we have been helping the merchant and business to collect money from credit card, e-wallet, bank transfer. 2021, buy now, pay later. But now, more and more merchant and business start to say, hey, I need to receive a new kind of payment, which is called stablecoin. So starting from 2021 until today, we are seeing more and more business in Singapore, in ASEAN, and now in more jurisdictions. They start to accept stablecoin as a new payment method, in addition to the traditional centralized, we call the e-payment. So we are seeing that for the last round of technology, during the internet period and the mobile internet time, so people will use credit card and e-wallet, this kind of, we call the e-payment, which is centralized. And now when we come to the new era of blockchain, there's a new way of payment method, which is stablecoin or tokenized deposit. So we do see there's a stronger demand, not only for the trading area for people to use stablecoin for trading purpose, to buy and sell for the investment purpose, but it's also getting to be used more and more in our business settlement for cross-border payment, for the day-to-day retail payment for the stablecoin. And most importantly, now the regulators start to recognize this. And we are just fortunate to be in Singapore. And Singapore government is one of the first jurisdictions back in 2021, and actually later in 2023, introduced a stablecoin regulation framework. And it also introduced a few licenses so far. And by next month, on the 1st August, Hong Kong is also going to take effect for their stablecoin regulation, which is now making stablecoin as a legal payment method to be used in the day-to-day. So with all this kind of upcoming regulation, recognition, we are seeing both in the investment industry and also in the day-to-day payment industry, stablecoin are playing a more vital role in our day-to-day life. Thanks.
Thank you, Louis, for your very excellent answer to this question. So, Brandon, you actually from the Web3 native world. So, what do you think of the stablecoin? Some people actually still think stablecoin as a utility token on the public protocol, or you think that's going to sort of unlock a new protocols? Or what's your view on the stablecoin evolving in the DeFi world?
Yeah, happy to give a perspective from the DeFi landscape. At its core, stablecoins are one of the most important building blocks in the on-chain world. And if you break it down, there's really three factors that you want to optimize for when you're using stablecoins on-chain. One of which is price stability, capital efficiency, and then also decentralization. So in the on-chain world, we call these three factors the stablecoin trilemma, because you really can't get all three of them. You generally only have to, can only pick two. So that has there's a few types of stablecoins that have came up since the birth of DeFi, and they all kind of fit into three buckets. The first of which is asset-backed stablecoins. So this is your Tether, your Circle, and they obviously underlying it is backed by Treasury. There are new ones that are popping up that actually pass the yield back to users. And you have some very new big entrants like Ethena, USDE. The second iteration is called CDP, collateralized debt positions. And that is effectively made famous through DAI. This stablecoin is called DAI. Right now, there are other new iterations of it, like if you guys have heard of Aave, one of the biggest lending protocols that has this new stablecoin called Go. And then the third final type of stablecoin on-chain is algorithmic stablecoins, but you don't really see that anymore, since what happened with UST back in the day. But I think with regulations picking up and allowing more and more stablecoins to come in, it's the key point I think that will make this grow the space so much more is that stablecoin allows for distribution. So I kind of like to think of it as like the App Store. So if you're using, say, a specific bank stablecoin, you can vertically use all of their products. So it's a great way for TradFi firms to come on chain and to effectively let users touch across all of their products. So I think with regulation coming in, the growth is gonna keep growing. In 2021, when the DeFi world was it was still starting out. It was DeFi summer. Stablecoin market cap was around 30 billion. Last year it was 120 billion, and now it's 250 billion. So it's continuously growing, and I expect to see that grow a lot more.
Yeah, thank you, Brandon, for your view. I think you definitely provide a very good definition in terms of a stablecoin, like unregulated and regulated stablecoins. Especially for regulated stablecoins, I think it can be actually sort of applied in many asset classes and also scenarios. So I want to get your view, Jason, from your standpoint. What do you think of it? Yeah.
Yeah, sure. One thing I'd like to do just to make sure everyone's still listening to us is, in a way, who here in the crowd has ever used a stablecoin to make a payment or to make a trade? Maybe put your hand up if you've used a stablecoin. Oh, wow. Was that for us or for something else? Yeah. Okay. Yeah. So actually, that's not bad. So, I mean, if anybody here who's used a stablecoin, I think you would probably agree that right now, to me, the killer use case for blockchains and stablecoins is payments, right? It's faster, it's more transparent, it's cheaper, because you can cut out some of the middle layers of fees. So to me, I think this is the future of payments. And the US Treasury recently put out an estimate by 2028, which is only 2.5 years away. They expect to see the stablecoin market grow to about 2 trillion on-chain, and we're at somewhere around 200 billion right now, so probably around a 10x growth from where we are today, right? So I think this is something that, as the panel said previously, that it's going to continue to grow and by orders of magnitude. So I really think it's going to change the payment system. And I just make one other point, because something that I think a lot of people don't realize when they think about payments with stablecoins, right? Because we've seen the negative headlines for the last 12 years in our industry. It's dangerous, it's used by criminals and money laundering and all of this stuff. But if you actually think about it, using a stablecoin is a terrible mechanism for crime and for criminals, right? And why is that the case? Well, you have full transparency on an immutable public ledger, so every single thing that you've ever done can be traced back to you. So this already in and of itself is a terrible, forum to commit crime. On top of that, though, Tether and Circle, they have maybe we'll call a backdoor in their smart contracts, so they actually actively work with law enforcement around the world, and they're able to freeze or lock the assets if they receive an order or request from like the FBI or who it might be. And they've frozen hundreds of millions or maybe billions, I don't know the exact number now. So again, just another reinforcing layer that I think gives comfort to regulators and payment processors and merchants globally.
Great, thank you, Jason. Yeah, you should mention the market cap of the stablecoins actually starts growing, and then the recent actually figure for the total market cap of stablecoin, I just searched it on moomoo. Actually, it's to be exact, it's 253.7 billion US dollars. So for all of you, because I think stablecoin is a growing story, so if you want to sort of follow the recent news, please actually open your moomoo app and you can search for it. Okay. And then Mina, so I just really want to get your take on the stablecoin use case at your firm. Given CME's position as the world's largest regulated crypto future issuer, how's the institutional interest in products like BTC and ETH future being influenced by stablecoin usage? Do you see stablecoin playing a complementary role in the institutional crypto derivative trading, especially with the growing demand for cash settle and regulated exposure?
Yeah, sure. This is a very great question and very timely and important question. So first of all, thanks for having CME on this panel today, and congratulations to the moomoo for a successful event. For those who are not aware, CME is the largest derivatives exchange in the world, and we have been in this space for more than 7.5 years by now, since we launched our first Bitcoin futures in December 2017. But just to clarify that CME, we do not offer stablecoin-based products yet, and we do not actually issue stable coins. But circling back to your question, Stephen, I think that CME, we are kind of in a very unique position because we are at the intersection between institutional demands and the stablecoin developments. And if you look into the recent momentum building in the States and Europe, Genius Act and the MiCA, those kind of legislations, it kind of signals a very important inflection point. And we do see this kind of stable coin is kind of increasingly playing a complementary role in how institutions are engaging with digital assets. So as you're well aware, stable coins are key infrastructure. It's fiat-linked bridge that kind of improves liquidity, also trading efficiencies and the settlement. And that's quite important for the crypto world because the crypto tend to be very volatile and fragmented. And the second, regulated stable coins, that really helps institutions to navigate and put their money in a trusted way. It kind of helps them to manage their collaterals more efficiently. And that's also kind of important because how it's going to complement to the ecosystem is that actually helps the growth of crypto derivatives like CME Bitcoin futures. And the third is that stablecoin can be acting as a hedging mechanism. And this is kind of important because Bitcoin tends to be very volatile. And this stablecoin can act as a hedging mechanism for the institutions because this can actually, stablecoin itself is kind of like a stable store of value, right? So when the market is volatile, this keeps institutions to stay in the crypto ecosystem, not pulling out their capital outside of crypto ecosystem. So all these are kind of developing, and we do that said. So of course, there are a lot of things to do in the regulatory side. Clarity from the regulators kind of still remain critical. But overall, again, CME doesn't issue stable coins, but we do believe that stable coin is kind of playing a complementary role. And this kind of growth is actually really complementing all the the regulatory ecosystem, which we have been supporting for. Thank you.
Thank you. Thank you very much for all of the very excellent answers to the question. I think a stablecoin is actually a tokenized version of a money or currency, right? But we think tokenization can happen actually in a broader sense. Then definitely there's a lot of the hype around it as well. In terms of the general sort of tokenization, Jason, Signum Singapore has been at the forefront of the tokenization since 2019. Yeah, it's 6 years now, right? From your perspective, right, which asset classes are seeing the strongest real-world adoption today? Is it a private credit, real estate? Please.
Yeah, sure. I mean, I think we're one of the earliest trailblazers in tokenizing. So 2019 or 2020, we tokenized fine art, a Picasso, some fine wine. And, to summarize, I think what the biggest problem that we uncovered and that many have subsequently uncovered is if there's no secondary market liquidity, once you tokenize an asset, if you cannot trade, buy and sell this asset, if nobody wants it, then it adds little to no value by saying that it's tokenized, right? So I think the lack of market infrastructure was one of the biggest difficulties facing RWAs in the past. Also, lack of clear regulatory oversight when you tokenize this real-world asset, especially globally. I mean, maybe you had local pockets, but I mean, this was just something that was not harmonized around the world. So it really made it small, fragmented pockets of experiments, right? And you've heard lots of hype. But I would say today, now we're starting to see, I guess, some things come to fruition finally. And credit where credit's due. You look to the U.S. and you've got some early trailblazers like BlackRock, who is probably the most successful RWA right now, which is a tokenized money market fund. And they actually even made subscription and redemption available via Circle's USDC. So they further reduce friction, so you don't even need to go through the banking system if you don't want to. And now you've seen, what I don't know the last number, like $1.5 billion maybe under administration for that BIDL fund. So So this has been, I guess, kind of opening the door, and now I'm aware of many other companies that are looking to recreate a similar model in several different jurisdictions around the world. Fidelity has also a similar product. We worked with Fidelity to tokenize a money market fund as well. So I think, when you start to see some of the big players in the world put money and real effort behind it, then see success off the back of it, to me, this is probably the first step. It will be the entry or the gateway into a broader tokenization. I think like fractionalized ownership is very interesting, real estate and other tangible assets, but I think it's a little bit harder to kink out all of the finer legal details. And I think maybe tokenizing like bonds or money market fund, these sort of financial instruments can actually benefit from some of the efficiencies of blockchain and tokenization.
Do you see any difficulties of doing that, achieving the goal of tokenizing, for example, like real estate? What's the biggest challenge?
Yes, I mean, because you're kind of merging like the real world and this new digital tokenized synthetic representation of ownership rights, this has been a very complicated thing to solve, I think, globally. I mean, there's been a few success cases. I'm aware of one in Dubai that was quite successful, but this so far has not proliferated because I think we would probably need to agree on some sort of a framework across maybe several different countries, and it's just a very hard problem to solve when you have fractionalization in the laws, in the regulations, in country of domicile of different people. So, but I do think this is a very interesting use case because you could actually unlock latent value in a tangible asset. You could, $1 billion building, could be bought by 100,000 people at a smaller number, right? So I think, there's a future for this, but I think it's not quite there yet, and that's why you're seeing probably early growth in like financial instruments instead.
That's great. Yeah, I think a tokenization is kind of like a marriage between like a Web 2 and Web 3. So from a Web 3, like a DeFi standpoint, what's your view on tokenization, Brendan? So, particularly how are Web 3 native platforms like yours helped to close the gap between Web 2 and Web 3 in terms of infrastructure, transparency between tokenized assets and traditional capital markets?
Yeah, sure. So I think let's zoom out for a little bit, and if we were to kind of just look at the entire traditional financial market, investable asset class, it's like around $500 trillion worth of assets, excluding real estate. Digital asset, if you Bitcoin, ETH, and all the other altcoins combined, it's around 3.5 trillion. So it's still a very small subset. So for us, when we look at RWA, I see it as a way to grow digital asset because obviously the best way to grow anything for the $3.5 trillion of digital asset is to grow intrinsically, right? Bringing new products, new protocols, new ways to grow that. But really the easiest way, in my opinion, actually is taking the remaining $490 trillion of assets and then slowly bringing that on chain. So definitely RWA is a big thing. And I think in terms of the timeline of how it's happened, it started really with stablecoins, right? It's like a tokenized treasury, BlackRock BUIDL. Now, very recently, you're hearing Robinhood doing tokenized equities or looking to do it, and a few other players, even Ondo. I think actually the biggest and the next step actually is for fixed income to start coming in. That's the biggest theme because if you look at traditional finance, fixed income is actually 5 times larger than equities, right? When you look at crypto, you have like spot, you have like options, but I think fixed income is still underrepresented. So that's exactly what Treehouse is focused on. So my background's in fixed income and credit derivatives. So we're trying to bring solutions and infrastructure to help solve this gap. We take inspiration from traditional finance to say that, hey, what really helped the fixed income market to grow in the 1980s was when people coming together and agreeing on a benchmark. And in the 1980s, it was the London Interbank Offered Rate. So what we built at Treehouse in our core product is called decentralized offered rate. So it's an oracle, it's a bridge to help bring on-chain data, off-chain data, on-chain. And we also tweaked it in a way that we've decentralized the system such that we are building a LIBOR equivalent for DeFi. So, I think, I second what, Jason is saying also. You can really tokenize anything, right? Once you tokenize it, I think we're still really early though. I mean, that's the truth. Because, when I go to New York once a year to talk to a bunch of guys that want to tokenize a bunch of things, but once you bring it on chain, right now at this stage, you just kind of have to look at it because there's not much things you can do. So a lot of infrastructure still needs to be built, and I think oracles are one of them. Yeah.
Just one more point on that. Larry Fink, you know what he said about tokenization though, right? And I think it's interesting when he says something, whatever can be tokenized will be tokenized. So if that gives you any sort of indication of where we might be heading, you can draw your own conclusions from his words, but very interesting when the likes of Larry Fink are saying this about tokenization. So just wanted to add that food for thought.
Yeah, that's a very good one, right? So I think Brandon also mentioned because the total value of on-chain assets is only 2.3 trillion. So remember actually NVIDIA, just not that long ago actually surpassed the 4 trillion. So that means actually the whole on-chain assets actually are still worth less than one single sort of stock. So that means actually tokenization of finished assets can provide a good supply of good assets on-chain, right? So that's a very good opportunity for us to do. So for payment, right? So we know, stablecoin plays a very important role, but I think FOMO is also providing a treasury solution. So within tokenization sort of topic, so how does that actually play a role in payment and also treasury management?
Sure. I think now the tokenization is a buzzword, but technically tokenization is just a technology. Like what Jason mentioned, you can technically tokenize everything. But the truth is, when we talk about the token, it can be generally categorized into payment token, utility token, governance token, and security token. So most of the things, once you tokenize it, it generally fall under one of these four categories. Then the question is, are you allowed or do you have license to do all of this? The answer is no. Now if you need to deal with payment token, you need to get the license, right? That's why the previous question we talked about, you need to get the stablecoin issuance license if you are providing a stablecoin service to mint and burn, which is already a regulated activity in Singapore, upcoming in Hong Kong from 1st August. But when we talk about, let's say, Jason mentioned, you can tokenize a wine, a whiskey, because those are considered as commodity. So you can just use technology to tokenize it and distribute. No different from selling the whiskey or alcohol ownership in the retail business. However, when we talk about the security token, it's a very hot topic right now, but security token is also a licensed activity, which in Singapore is considered as a capital market products token. And you need to have the license to provide the dealing, trading service. So tokenization is a technology, which is a fundamental layer. But on top, if you are dealing in these activities, you still need to consider how to run it compliantly and by following the rules to deal with that. So when I look for FOMO, we have the payment arms, as we shared, which enable us to deal in payment token to help the business merchant to accept and pay out stablecoin and fiat. But we are not able to deal with security token, which is technically an investment activity. So that's how we segregate, even internally. But externally, when we look at this, there is another arm of FOMO, which is called the Cap Bridge. They are the CMS licensee in Singapore, which is able to distribute and custody for the security part of the business, which is now, when we talk about the security token, just now, Steve, you were sharing, right? What are the mainstream, popular, tokenized products right now? We see it starts from stablecoin, which technically you tokenize the money, put it on chain. Then we also see tokenized treasury, which popular ones including the US Treasury bills. People are tokenizing the US Treasury, and now the money market fund. If you notice, the China AMC from Hong Kong, they are one of the first to issue a tokenized money market fund. And then we also say the UBS, they do a UMint, which is another tokenized market fund. They do from Europe. Then from US, then BlackRock, they have something called the Buildo. Now all of this, even though we call it a token, but fundamentally it's a security token. So you still need to go through the licensed players like moomoo, then you can buy in the right way, and then you are able to deal with it after you KYC yourself. But there are a lot of concepts in the market which they are trying to blur the line between the security token and the commodity token, which has been the real discussion in US, in China, in Singapore, in Hong Kong right now, whether this token is security token or it's just a utility token. So when all of us, when we talk about digital asset, we need to be very, very clear. Think, whenever you deal with any token, think first. Is this a payment token, which means they are stablecoin, CBDC, tokenized deposit? Or this is a utility token, or it's a security token. If it's security token, you better deal with the licensed regulated player to make sure your interests are protected. So that's our views on the tokenization. When we talk about tokenization, we also need to look at which token it is we are talking about. Then we can dive into more details how to really do it. But no matter what, for FOMO, we do believe that more and more assets, more and more commodities, more and more products are going to be put on chain, which means tokenized in the near future. That will be the reason why Jason mentioned now it's 250 billion circulations for stablecoins today, but in the next 3 to 5 years, it's forecasted to be $3 trillion of the stablecoin on chain in the next 3 to 5 years. Why there's so much more supply of the stablecoin? The answer, partial of the answer will come from the tokenized asset, the RWA part. Yeah, thanks.
That's a great one. Louis, thank you very much for mentioning moomoo as being the regulated platform. Actually, we are fully KYC, but unfortunately, because currently we don't support any tokenized asset distribution or subscription. But today, early today, I think Gavin mentioned that we're going to support like a VA-in, VA-out function anytime soon this year. So with that, I think we can sort of take a stable coin and then allow our investor to invest into tokenized funds or tokenized sort of treasury by then, right? So from a traditional financial institution standpoint, so I really want to get your vantage point in terms of what actually tokenization really means for your business. Mina?
It's such a great question, and I'm learning a lot, and I really like this panel. Thanks for all the insights, Luis. So, at CME, we see tokenization as a natural evolution of capital markets. It's not a buzzword from our standpoint. It's a real, solution for improving efficiency, trading efficiency, and also transparency and market access. And that's actually why CME, we kind of partner with Google early this year to pilot Google Cloud Universal Ledger. This is a novel distributed ledger, which is designed for real-time movement of tokenized collaterals and payments. And we have just completed first phase of integration and the testing. And we'll probably begin reaching out to the clients later this year for this as well. The goal is to bring in all the efficiencies related to margining, clearing, and settlement, because all the traditional markets as well as digital native exchanges are moving toward 24/7. So we are excited about this because this is not theoretical. And you see that tokenization brings a lot of tangible benefits. It really reduces the operational cost, and also it can actually make the settlement process faster, and potentially it can actually democratize market access as well. So it's not changing the existing environment. It's more of enhancing using the blockchain-based tools, and which is kind of supported by both crypto natives and the TradFi institutions. So to that point, we do think that tokenization is no longer a hype. And from like CME's vantage point, like tokenization markets are not a disruption. So it's like, very strategic extension of regulated ecosystem is our viewpoint. Thank you.
Okay, great. Yeah, so when we talk about Web3 and crypto and tokenization stuff, I think that people usually really have a lot of things to talk about. So actually, some of the answers actually are spontaneous, right? For sake of time, I have to sort of skip some of the questions. Maybe we can talk a little bit broader, bigger topic. So Asia's strategic role in global digital finance, right? So why is Asia critical from the talent, innovation, regulation, capital flow, point of view? Maybe I will ask Brandon to give your opportunity to explain this question.
Yeah, sure. So, Asia continues to punch, above its weight, right, in terms of crypto. And, I think when you look at the talent, I think part of it is, this is like a breeding ground for a lot of talent. Some of the biggest, at least from an on-chain perspective, like protocols, companies, were born here and operate out of Asia. I think if you look at the data too, 3 of the 5 fastest growing regions or countries are all in Asia in terms of crypto market adoption. And Asia is first in terms of mobile first behavior and also retail engagement in crypto. So even for us, Asia is a very important piece of it. I think from a regulatory perspective, we're seeing more and more countries, pushing it. Not that they haven't, Hong Kong, Singapore have been pushing really hard over the past few years. But I also like to, look at it from the other perspective that it's getting a bit competitive too, right? In the U.S., with the stablecoin bill passing, and even, the president launching a stablecoin, USD1, in the U.S. So, ultimately, I think, where I see 10 years down the road for crypto as a whole is that, whether it's digital asset, whether it's just finance, it's going to be abstracted away, hopefully, right? It's just going to be one thing. And regardless, Asia has to keep pushing. It's going to be a lot more development. I'm excited to see, I'm excited to see this space, especially out of Asia. And I see that with, from a talent perspective, I see that from a regulatory perspective.
Yeah. Yes, indeed. I think the world actually is competing for talent, for capital flow. The U.S., Europe, and then Asia as well. And Asia, Hong Kong, and Singapore are going hand in hand. Jason, so as someone operating across both Asia and Europe, so could you please share your perspective on how those 2 jurisdictions compare, particularly in terms of digital asset adoption and then regulatory environment?
Yeah, sure. There's a reason that Signum was co-founded in Switzerland and in Singapore. We chose these 2 locations because of the forward-thinking nature of the regulators in each jurisdiction. And we were fortunate enough to get a banking license quite early on in Switzerland. And we have both the capital markets and MPI, or basically the DBT services license here in Singapore. The similarities are actually quite many, but I guess the way in which they end up rolling out are a bit different. But I would say the most important thing and the reason why Singapore has become such a global hub, it's not even just a regional hub. If you look around who's here, all the American, European firms, almost everybody in our industry is here, also global finance, but I'm talking crypto specifically. If you want to operate your business, you need legal and regulatory clarity. You need stability, right? And this is something that Singapore has done a very good job of providing the industry, also working with industry. Not taking knee-jerk reactions that actually kills innovation and kills business. So kudos, honestly, to the regulators here, because it's actually given a safe environment to allow the industry to grow. And I would also, though, on the other side, say sometimes people think that, it must be so easy to do a regulated crypto business in Singapore, right? It's far from the truth. Actually, it's quite strict, highly regulated, highly monitored. There's a lot of rules and guardrails, but it's meant to protect investors, right? And I think that is something that attracts a lot of capital, a lot of companies to build and grow in Singapore.
I just want to add on a quick point here, since we are talking about the talent and the skills here. Because how to make it relevant for everyone today, right, which are fantastic individual investors, or some of you may have your own business. So even though Singapore may not be the technology developer for this new technology about tokenization, stable coins in the early stage, but we can upskill and reskill ourselves to be the early adopters for this kind of new technology. And that is fantastic about Singapore. And even, let's say for us, you can just start by having, right, maybe the first tokenized money market fund to try it out, or you can try to use a stablecoin to make a payment. So sometimes you may not have to be the developer to make yourself relevant for this kind of upcoming trend, which everybody feel FOMO, fear of missing out, all this kind of trend. But you can be the adopter about this kind of new trend, either to apply stablecoin payment in your business, or you apply the tokenized money market fund for your treasury, for your investment. Then you can get yourself relevant to feel it. Then you can see, okay, you can actually also be upskill and then to become a relevant talent, having the relevant skills to make yourself, tap on this trend. I think that's something I also want to share when on this talent and skill topic. Thanks. Yeah.
That's a good one. Actually, you mentioned probably deliberately your company's name, actually your answer, FOMO. Right. So we heard this actually word quite a lot, right? That's a sentiment. So yeah, I think for sake of the time, I think we have to sort of only have the one last question. So in order not to FOMO, we have to sort of think big, go big and think big. So I just really want to get your take on the future, what the future looks like, based on what we talked about today, like stablecoin, tokenization, even something actually we didn't touch upon, right? Like DeFi world. What do you think actually the future will look like? It's more of a open sort of question. Maybe Brandon, do you want to share your view?
Sure. Maybe I can talk about stablecoin because I think that's one of the hottest things right now. I recently was looking at the top buyers of U.S. Treasuries, and I was looking through the list, and I saw Circle and Tether actually in the top 20 list, which is pretty interesting, and I think as something to watch. I mean, I know we don't have much time left. It's an interesting development as more and more stablecoins come. This group of issuers are going to be a more important player in down to monetary policy, especially in short-dated treasuries. So that's going to be an interesting development I see down the line that would impact the entire financial market when stablecoins actually has an impact to the yield curve.
Okay, I just want to summarize in 2 sentences. Basically, the trend is from stock to block, from e-payment, electronic payment, to digital currency payment. So basically, it's last time when we talk about the investment, maybe the stock market has been the only option. But now there's an alternative new one, which is RWA digital asset. So that's from stock to block, because the asset is now putting on chain onto the blockchain. Then the e-payment is, we were used to the credit card, e-wallet, all this kind of payment day to day, which is fantastic. But there's also upcoming trend for stablecoin payment, which is digital currency payment. It's a bit different from e-payment, but it's a new trend, which is digital currency payment. So that's my sharing as a takeaway.
Yeah, from stock to block, moomoo. From payment to e-payment, FOMO. Anybody else? You want to? Yeah?
Yeah, sure. I mean, I guess my thesis from a long time ago was lucky to, this is a personal opinion, get into the space quite early. I figured that when I understood what the technology could do, that if we were successful, that it could transform the infrastructure layer of the financial world, starting with remittance or international payments, because that was my frustration. That was solved by sending blockchain peer-to-peer in a trustless manner almost instantly and almost for free. So, I think many years later, we're starting to see or realize the true power of this. And, I think the train has already left the station, and I think we are going to see much of the world's financial plumbing run on blockchain infrastructure over the coming years and decades.
Okay, great. The screen shows actually time is up. I wish actually we could have more time. So thank you very much, guys. Actually, please give your biggest a round of applause to all those actually panelists, Brandon, Louis, Mina, and Jason. Thank you very much for your very great sharing. I know the last one actually will be like a final sort of big lucky draw. So we don't really want to sort of increase your opportunity cost. So we'll finish up here. So thank you very much. I wish you all the luck with your investing and learning. Thank you.